If you enjoy this content, please take a moment to rate and review it. Your feedback will greatly impact our ability to reach more people. Thank you. All right. I got invited to speak at Nashville Healthcare Sessions.
Oh, nice. Maybe I'll buy a ticket now. I've been meaning to buy a ticket, and I just haven't got around to it yet.
Yeah, you better follow that one up. Yeah, I'm going to be on a panel with Anna Hagui and Adam Bowler.
Oh, nice. Good.
So investors who write really, really big checks, and then me.
No.
With my little,
it's like the smartest three investors in healthcare.
I don't know about that. But I did. It was nice to get the ask.
Yeah.
Yeah. It was nice to get the ask.
It'll be a good audience. They do a good job. I'm just picking on them, but I had not bought a ticket until today.
Yeah, it's pushed out to October. But I'm glad we had that event. It's good to have sort of a regular healthcare gathering that is like thrown by our healthcare council here and is focused on innovation, but also brings in all the big players. It's a good look. Yeah. It's a good look. Anything else going on?
No. I mean, I'm still sort of digging out from being gone, but I'm just now head above water, feeling good. I'm trying to get 2 deals done before September. We'll see. It's a lot to get done, but yeah, it's good.
Good. All right, man. Let's not waste any time. Let's dig in. So, big Fed week. This was the week to make an announcement on whether or not there was going to be a cut. As was widely expected, there was no cut, but the path has been paved for a potential cut, and potential is an important word here because we're still not sure we're going to get the cut in September. Right. But Powell is switching his language to start to not only talk about inflation, but also talk about employment.
Yeah,
which is important. So recognizing as unemployment sort of has crested above 4%, that's a clear sign that all of their tactics have been working. Inflation is cooling, and we now, may be at risk for some other problems in the market that we need to address through rate cuts.
Yeah, that's right. That was the big change. Is he went to there's an equal balance of risk on both sides, where previously to yesterday he had not done that.
Right.
I think, as you and I have been talking about for a while, I think we're not going to get down to 2%. And he didn't say those words, but effectively that's what he's saying, I think, is that we are at a place roughly 3% inflation that is probably, it's definitely much better than we were previously. And now he's looking at a more balanced, where does he need to make slight course corrections to make sure that we get to this soft landing and we're healthy.
Yeah.
I think the balance is a little weighted to we need a cut. And so people think it's over 0.5% chance that he'll cut in September. So hopefully he will.
I was talking to Emily, I think on Tuesday, and she made, of course, the obvious point, but one we have not really talked about, which is that, you kind of should be thinking about the Fed funds rate as being inflation plus X. And then it's really a debate about what X should be, right? It needs to be above inflation because you need to get a return on your capital above inflation, right?
Yeah.
But how many points should it be, right? I mean, it doesn't need to be skyrocketing. And so if we're at 3, we're not going back to 0. We know we're not going there. We're at 5.5 now. How much over 3 or 2.75, right? If that's where inflation kind of hovers for the foreseeable future, how much over that should it be? And then that kind of gives us a sense of where the cuts should get us to, right? And also where they might kind of try to keep that band between where inflation is and where the Fed funds rate is, based on how employment and a bunch of other data factors are. So I thought that was just a helpful rubric to kind of think about it. I don't know what X is. Maybe it's 2% or something like that. But I just think that is it's an interesting way. But, those two things have been so divorced for so long. Right. We've been at 0%, Fed funds rate for a decade. For and then, we went to 5.5 and the inflation was above the Fed funds rate for a very long time. But now we're kind of in this range where, okay, can you manage it to where it's consistently 1.5 points, 2 points above inflation regularly? And that kind of makes good financial sense, I think.
Yeah, I think that's the math. The other side of the math is something called R star, which is I think it's R star, which is the Fed's view of what the steady state economy can grow at. And there's a lot of debate about what that is, but maybe it's 3% a year, 4% a year, 2% a year, 5% a year. People debate different things. But if you grow faster than that, then there's going to be inflation. If you grow less than that, then you start having difficulties. I think all of that math makes sense in the long run, but the markets, including bond markets and equity markets, are very emotional. And so I think I like that Chairman Powell was telegraphing pretty clearly his change in posture and giving the markets time to think about it. Then hopefully he'll do a couple meetings of slight rate cuts and see how it evolves, because the math is one thing, but the animal spirits in the markets go all over the place, and then that affects everything. The other piece is, he's looking at U.S. data, but the world's very integrated, and the interest rates here affect things all over the place, and the global markets affect us. So it's all intertwined, I think. Yeah,
but I think he really has to act on behalf of us first and foremost, right? I mean, just per statute.
Oh yeah, that's his job.
Yeah,
but I think the inflation, especially the inflation side, is pretty impacted by other. How many goods is China producing, and all those. What is the transportation costs, all that stuff.
Yep. So how did Powell's news land with the markets?
It was good yesterday. Everyone celebrated it. Stocks were up, and then today is a new day, and it's
Thursday,
not so
bloody
good
Thursday.
Today. Right, that's right. So I don't know. I guess markets liked it, but it didn't last very long.
Yeah. All right, and let's talk a little bit about commercial property. Wall Street Journal has a report here suggesting that the bottom is near on foreclosures. Is that?
Well, yeah. Go down to the graph. So the headline is that foreclosures are increasing. Keep going. Next one. Because of that, foreclosures are about to be finished.
Okay.
That's what the headline says.
Yeah.
And when I look at this graph, which is delinquent for people that are listening, it doesn't seem like it is slowing down. And so it's like straight up in delinquency rates.
Yep.
Now, foreclosures are the next step after delinquency. I'm hopeful that we're at the peak and it's just about to turn over, but I don't see a lot of indication that it actually is slowing down. So it would be great if we're at the bottom. I don't know that I can say we're at the bottom.
Well, what was the point of the article in terms of saying that foreclosures were indicating that the bottom is near?
The basic point is that banks do not want to foreclose. They don't want
of course not.
They don't want to do it. They try to delay. And so the fact that foreclosures are ticking up is indicative that banks are taking their medicine, and therefore we are beginning to have the end of this process.
Okay, so near is a relative
That's why I
here.
jumped in. I don't like the title. It's kind of it's a relative term.
Yeah, near is relative. Near could mean in the overall cycle, we're near the bottom because we're in the phase of the cycle where the banks start to take their medicine. But we have no idea how deep that medicine cabinet goes, right? I mean,
yes,
that could be a while.
Yeah, I mean,
depending on how many bad loans are on the books.
Well, there's a lot of bad loans on the books. I think we know there's a lot of bad loans on the books. The question is,
bad loans that get to foreclosure.
Yes,
that's what I mean.
Well, they have foreclosed on 13%, which is, more than a long time since 2015.
That's a lot.
There's a lot more that are in default and haven't been foreclosed on yet. They're in technical default. The hope is that the Fed cuts their rates and people move back into offices and everything is happy again. It's certainly true that it's a sign that the market is starting to take its medicine and heal. I'm not sure I agree with the conclusion that we're near the bottom.
There's a graph here of foreclosures on the rise, and it shows that tick up that you were talking about. It measures here in billions across the years. Coming out of the great financial crisis, there were 5 years of, 35, 40, $45 billion worth of foreclosures kind of year over year.
Yeah.
So we just crested above 20 in the last quarter, but we got a ways to go to get to that amount, but we are heading in that direction. So I think basically what they're trying to frame up is we don't think the problem has the depth of the great financial crisis, and B, we don't think lenders want to do anything to return to that. What would the impact on the general economy be if we get up in the 30 billions on foreclosures? What's the downstream ramifications of that in terms of the banking industry blowing back into the rest of the financial sector?
It's a very negative headwind on the economy. The reason we had zero interest rates from the Fed for, I don't know, a decade or 12 years is we were working through all of this backlog of residential real estate problems.
Yep.
And maybe other reasons too, but I think that was the main reason.
Yeah.
The Wall Street Journal has smart writers, so I'm hopeful that they're right. But in my mind, the change in how we work as a society is pretty significant.
It's very significant.
And the change in interest rates was very significant.
It's durable.
And it's durable. So I am not comfortable with their assumption that this will be the end and we're not going to return to those very large numbers in a similar way. Now, it's a different market. It's commercial buildings.
I guess that's what I'm trying to understand, right, is because it is a different segment of real estate, it's still bank balance sheets, right? So it still impacts the banking sector, and then what does that do to the overall greater financial sector, right? You said it. It's significant headwinds, and right. I'm not sure that residential versus commercial makes that much of a difference.
I don't think it does.
I don't think it does.
It is. It's different, but the same impact, the same like transmission mechanism from bank balance sheets to we can't lend anymore to there's no availability for credit to the economy can't grow. I can't buy a new machine I need. That transmission mechanism is the same. So,
and the Fed's answer back then was we go to 0%
and TARP.
Yep.
Which
yep.
Hopefully it won't need, but they could do that. That would be the answers again, I think.
Right. Wow. Bailouts. Okay.
You probably remember all the private equity guys started using TARP and low interest rates to buy up thousands of residential homes.
Well, I think the reason why we're covering it is because we like to understand what's going on in the broader economy, but also like in the context of what we do, it's still generally speaking winter in the private markets.
Yes.
Right. And as much as we like to cheer for the overall economy to be healthy, the reality is 2010 to 2020 was a boom time for the private market industries, for venture capital, and for private equity. And this real estate thing kind of hovering in the background while our private markets remain in winter. Maybe it's getting into spring, but it's still winter for the most part. It's an interesting dynamic, right?
Yeah, and that's part of the reason we cover it. The other reason is that a lot of the tools the Fed would use, for instance, a TARP-like bailout or zero interest rates or a quantitative easing. There's a set of tools, but it's not infinite. We can guess what they would use.
Yeah.
Those have also a transmission mechanism that goes through financial assets, and it props them up dramatically, which is good for our portfolio. And then it eventually flows through into the overall economy. And so this either will resolve itself without support, which would be good for the overall economy, or the Fed will have to step in, and then there'll be a lot of money printing, a lot of inflation, but also financial assets like venture capital assets will, be very high. And that'd be good for us. But we want to know so we can be ready to sell. And our listeners should be aware that, the Fed has tools to bring to bear, but they cause inflation and they benefit people with stock market portfolios, which is not all of America.
Mm-hmm.
And then that causes challenges in our society around like culture classes and haves and have-nots and all those issues.
Right. Okay. And then the final point being, while we can't be certain about what one administration might do versus another administration, we do know during the GFC, Democrats were in the White House, and we're about to have a big situation here in November. And it's still kind of a toss-up. I mean, any given week, we've got sort of different set of polls laying out what will happen. And so whoever that next administration is, it's unlikely this actually hits its conclusion where there might need to be some serious action coming in between now and November. It just doesn't seem like it's that much on the bubble.
Yeah.
And this is probably a problem that the incoming administration will have to address in some way, shape, or form.
Yes, and it doesn't matter if you're right or left. If you have significant real estate problems,
Financial crisis.
you have to deal with it, and the Fed only has certain number of tools.
That's right. Yeah. Okay. This is a story that you didn't love that much, but you just wanted to introduce it, I think, because
of the last story.
Yeah.
Right.
Yeah. So Wall Street Journal headline is "The Haves and Have-Nots at the Center of America's Inflation Fight." So effectively talking about, why inflation is so problematic. I have to admit personally, like, inflation is starting to kind of kick my ass personally. I'm just getting tired of, like, every day I'm just looking at what I'm spending and I'm like, man, I'm spending a lot of money every single day just to live.
On little things. I mean, like,
just to live.
I used to go to there's a grocery store here in town that I like their deli area, and I went there a couple times a week to eat. I can't go there anymore. I spent $22 on lunch, and I just got a salad I made myself, and that's the kind of stuff that I notice. Now, can I afford $20 something for lunch? I guess so, but I'm not comfortable paying for it. I don't want to. Right.
Yeah, don't want to. Yeah. So, I mean, I think we've talked before the show. We're committing to try to find some more sources that I think could do a better job than maybe the Journal on a story like this. We're gonna start digging into the archives of Substack and trying to find maybe some more citizen journalism that can better represent what the average American is experiencing, because the average American is about to have a huge say in November, and inflation is really going to be the top issue.
Yes.
I think at the end of the day.
Yeah. I think that's right. And there's a couple ways. I mean, there's two different views of how to change it broadly. Mm-hmm. And we don't need to get into the details of it, but I think the Democrats will try to do things like the Inflation Reduction Act to use the power of government to help people.
With stimulus.
With stimulus.
That's what it is.
Well, they're negotiating pharmaceutical prices, which is not stimulus.
Well, that hasn't come to fruition yet.
Yeah.
B, the average American has not felt those savings in their drug spending yet.
Right.
So, I mean, you could talk about the work, but you actually have to bring receipts.
Yeah.
When it comes election time.
Yeah. And then the Republicans will attack inflation differently, trying to reduce regulation or things, but neither side has a really good recipe. Inflation is very difficult to stop.
Yeah, it's sticky. It's difficult. Right. The challenger brand, the Republicans in this case, they have the benefit of not being the incumbent.
Right.
So to me, it doesn't matter what the policy is. It just matters who's the incumbent versus who's not the incumbent.
The challenger always will have an advantage.
The challenger has an advantage, and so how does the incumbent convince people that they can manage the problem and they've got it under control? Right.
Yes. Right.
And
it's good unless something changes radically. And the Fed cutting rates is not likely to make it change radically. The incumbent, the Democrats, have had a lot of inflation.
Yeah.
Now, there's the pandemic. There's all kinds of stuff. I mean, but who caused it is not necessarily going to matter when people are thinking about, like, what did lunch cost today?
It never does.
Right.
It never does. I mean, we're just talking objectively about the way that elections work, and it's not about who caused what. I mean, obviously, there's always spillover from previous administrations into the next one. They're always inheriting the last administration's bag. Okay, going into our VC deal review. Mental health benefits company Spring Health hits $3.3 billion valuation, boosted by a $100 million Series E round. Big rounds are back, man. Big rounds and big valuations are back. And this is second week we're talking about a really big mental health company here.
Yeah.
So mental health is hot and scaling.
Yeah, that's right. And I think, and it should. We need a lot of services, and all of these big private companies are using a combination of digital services sort of in conjunction with in-person services, which I think makes a lot of sense. The thing that I'm noticing that I want to get your thoughts on is it's kind of like a barbell sort of private market. There are very big deals that are happening,
and then very little,
and then
seed
really
deals.
Little seed deals. There's not a lot of those like
There's no graduation
series. Yeah, there's no graduation.
There's no graduation.
For the listener, that means like going from C to A or A to B. Those middle phase ones where you need to you've hit everything you wanted to hit that you told your board and your investors you would hit, and it's time to raise the next $10 million. Those rounds are really hard to come by right now.
Yeah. I mean, we've talked on the show about how seed is kind of like the new A, and seed companies have to become economically productive.
Yeah.
Meaning, so I'm not speaking in code, meaning you got to be able to show that you can generate really, really good revenues with good margins and at least get to cash flow positive if you want to. You know, like you got to be able to do that at seed. I mean, it's the bar is now so high to graduate to an A. You know, it's hard. It's hard.
I'm definitely moved into like a preaching category that my management teams are tired of me preaching about. But you got to be resilient. Like it's anything could happen, right? We could have a cyber attack. We could have the election's going to freeze a bunch of stuff. And even if it's not that, you have a lot of trouble. So getting to the ability to be cash flow positive, pay your own way while you're waiting, if you can do it, makes a big difference.
Yep, absolutely. All right, we got a couple more pretty big rounds here. Fertility and period tracking app Flo Health banks $200 million to reach unicorn status. Another story in fierce healthcare.
Yeah. So women's health really is having a moment. A lot of attention on women's health broadly. We have a portfolio company that's doing well in women's health as well. Certainly not a unicorn, but gaining a lot of traction. And so I think it's great to see. It's been an area that wasn't invested in for decades, and Flo does a great job.
I think of note, Flo is based in London, and raised their Series C from General Atlantic. So, you know, this is we don't see this every day. A big health tech company from across the pond getting, you know, hundreds of millions of dollars from a U.S. based VC. So that's really impressive.
Yeah, that's right.
So congratulations to the Flo team. And then final story here in the wrap up, Kestra Medical Technologies lands $196 million to boost commercialization of a wearable defibrillator. So that's really cool. It basically, they've got a picture here, and it's like a vest that you just strap on underneath your clothes, and you've got a defibrillator. Now, what is the disease situation that would require you to be constantly wearing a defibrillator?
I assume it's that you have some kind of heart failure, maybe really bad AFib or some problem that you have to wear it. They say in the article that it's much more common that women have this situation where they need the wearable defibrillator. But I don't know the details enough. We need to ask Dr. Riddick or Dr. Reddy, or healthcare or cardiac experts in it. But $196 million is a lot of money.
Yeah. And this device has been used by 10,000 patients, and it's also I didn't point this out, but it is specifically designed for female cardiac patients. So in that way, even though it's a cardio deal, it's women's health again.
Yeah. I didn't put it together like that, but yes, it's another women's health.
Yeah. So good news to see these 9-figure deals happening.
Yeah.
We would love to see more large 8-figure deals happening.
That's right.
Let's get some $30 and $40 million deals happening, because it's kind of like you said, the barbell, a lot of 4s and 5s,
right? And
then 200, and not a lot in the middle. All right, moving on to policy land. FDA has issued an alert to everybody about compounders who are making GLP-1 and selling them, and basically saying we're seeing lots of overdoses due to the inability to accurately measure the dosing. And it's sending people to the ER. They're having, nausea, vomiting, dehydration, lots of, pretty bad and unpleasant side effects coming with the overdosing. Nausea is kind of, I think, a pretty typical side effect that comes with the GLP-1s.
Yeah, right.
But when you overdose, obviously, it can send you into a binge. So this is noteworthy because we've been talking about how there's a shortage of GLP-1 drugs from the major pharma companies, Novo Nordisk and Lilly probably being the two biggest brands out there. And so companies like Ro, who have become very popular for selling ED drugs, hair replacement treatments, and things like that, got approval, sort of in like an emergency approval, to compound these drugs. And now the FDA is issuing an alert talking about the dangers that are coming with these compounds.
Yeah, that's right. And I think that, listen, the GLP-1 medication, if it is dosed properly, is difficult to titrate and get correct. And so even working closely with your doctor and using one of the, FDA approved and produced by Lilly or Novo Nordisk, it is difficult in that setting to get the dosage right. Compounding is, I think it's allowed in any situation where there's a shortage of the drug and you don't cross state lines. I think that's the federal rule. And so the FDA can't really stop it from occurring because it's part of the regulatory landscape. I've seen probably hundreds of startups that are trying to fill this space.
Sure.
You mentioned some of the large, better known brands that are doing it. There's like pieces of paper posted on telephone poles saying, call this number and you can get your GLP-1 for $200 a month. Of course, it is more risky to go with a compounding source that you don't really know exactly what's in it. Everyone is made one at a time.
Yeah.
But the entire market, I think, is a challenge. So from a dosing point of view.
Yeah. Well, I think you're right. There's not anything that can immediately be done. However, because of the popularity of these drugs, I think you could get into a situation very quickly where there's a substantial or at least statistically relevant number of overdoses that start to, be registered in the healthcare system, and it forces some form of enforcement action. And that enforcement action may or may not be that easy to enforce, but it could create additional expense for the companies that are doing the compounding, which then changes the calculus of whether or not you want to actually be in that business, right?
Yeah.
So there are things that the FDA can do if the compounders are not able to get this problem sort of in hand. And I think you just made a really good point, which is it's probably not, the Rows of the world that are very, very well capitalized. I think Ro's a publicly traded company.
Yeah.
That's not who we're worried about. It's many of the smaller players who are out here who are, mixing this stuff up.
Yeah. And honestly, that's the primary reason that at least in my fund, we haven't invested in it. Not that it can't work and it's not profitable. It can work and it is profitable. But I am concerned that there's going to be lots of negative press and bad actors that aren't anything to do with the company that I was involved in that would pull the whole thing down and make it challenging. So,
yeah. And then wrapping up policy for this week, Utah has created a new AI office, and they are focusing on Gen AI and mental health care. This is sort of par for the course with Utah, kind of going above and beyond when it comes to putting regulatory protections in place as it pertains to technology, especially internet-based technology for their citizens. Listeners may know that the state of Utah was one of the few states to put age gating and age verification in place for pornography online, and that sort of was a big deal for a little while. I mean, it's still in place though. So this
they got a bunch of alcohol laws that are
additional
confusing.
Alcohol laws,
right.
exactly. So Utah, this is kind of the thing that they do, and now they're focused in on AI and Gen AI in particular in mental health care.
Yeah, that's right. And I feel like a broken record. I appreciate the sentiment, like trying to protect their citizens. And I agree, they have a track record. If you live in Utah, you know that the state is more active in trying to protect you from what the state perceives as things that are bad for your health. And you probably appreciate that, or you wouldn't live there, or at least it's as a trade-off. Their ability to actually take a BYU, math professor and have him pull a team together to actually regulate behavioral health AI, I question. But it's on brand for Utah.
I mean, I guess the only thing I would just say there is you and I have experience with Utah, right?
There's great people in this.
And
Utah University is incredibly innovative.
Yeah, I mean, I guess what I would just say is that what I have experienced in Utah is that they have, and my experience is limited to Salt Lake City. Mm-hmm. I'll preface that, but they really have integrated their business community with their higher education institutions, with their state government, and in a pretty tightly knit way, where I think they're able to pull this stuff off in a way that other states, I think, would not necessarily be able to pull that off. So that's, I mean, yeah. I just think they're well organized and integrated in a way that a lot of other states are not. That's
and I'm not trying to pick on the particular person who got tasked with leading this. I think it'd be very difficult for any person coming out of a university who isn't very, very deep in Gen AI to be able to keep up. It's moving very quickly.
Yeah. All right. Our payer rundown. Cigna's Evernorth Health Services drives revenue growth. Let's see here. Adjusted income from operations was $6.72 a share. Cigna has exceeded analysts' expectations, and it's driven by their health services division. For those who've been tracking, Evernorth is effectively Cigna's version of Optum, and they have been building it out pretty aggressively over the last 2-3 years as they've focused in on the consumer market, sold off their HealthSpring business, and now they're starting to reap some benefits from it.
Yeah. Cigna's a well-run payer. I think we talked about this maybe last week or the next week before. The trend is now health systems and payers are both beating earnings numbers, beating revenue. Cigna didn't raise guidance, but several are raising guidance for the year. Seems like everyone is doing really well in healthcare, which is great to see.
Great. Awesome. And Centene, I think we'd predicted this, but they are posting $1.1 billion in Q2 profits as they're facing down Medicaid headwinds.
Yeah, I don't know what people mean with Medicaid headwinds. I mean, yes, the redeterminations is moving some people off the rolls, but
I think that's what they mean.
Pricing is up dramatically.
Yeah.
And so, yes, Centene is doing very well, over $1 billion in profit, and I think they'll continue to do well.
Yeah. Medicaid all of a sudden has become very, very attractive.
That's right.
Alignment Healthcare raising their full year guidance after a favorable star rating recalculation.
Yeah, so this is one of those that was really benefited from the recalculation and the reversal of basically the star rating challenges.
And how big is this plan?
It's not that big. It's 175,000 members.
Okay.
So it's a small. This is one of those tech-forward payers.
This is a
newer ones. Yeah,
okay.
yeah.
Okay. And they are now beating their expected earnings because of the reformulation of the stars after the loss in the court case for CMS.
Yes.
Wow.
That's right.
Wow. Talk about a court case deciding your quarter.
Yeah.
This is another very, very small payer focused in LA. LA Care tasks social workers to serve the unhoused population.
I'm interested in this because we have a lot of homeless folks in the country. LA has 20% of them. In this story, it says that, which was shocking to me. And I think it's great that the payer in LA is now trying to address that by bringing social workers in and sort of meeting them where they are in the street, as opposed to waiting until they get to the emergency room.
I mean, when you've got 1 in 5 homeless people living in your county, there's a real economic impact to doing this kind of work.
Yeah. I mean, it's important to do, and it is terrible that there's that many homeless people in LA County, but apparently there are.
All right. Teladoc posted an $838 million loss in Q2. Teladoc has just really not been able to get their act together. I actually didn't know that they had acquired BetterHelp, but they apparently have laid out BetterHelp in a strategic pivot that they're making. But man, a loss of almost $1 billion in Q2 alone, and failing expectations specifically for BetterHelp. That's rough. I mean, what do you think about that? I mean, BetterHelp is kind of like probably the number one brand out there in telebehavioral health. You see their ads all over social, on television.
Right.
So, the brand for sure. We're seeing these multi-$100 million rounds in VC, Series C, Series D, expanding, and it seems like, successfully expanding mental health services. What is it about the Teledoc model that is so beleaguered, where, payers are doing well right now, providers are doing well right now, these matching platforms are doing really well, but something about the Teledoc model is just fundamentally flawed at least in today's environment?
I mean, their core model is providing telehealth services to, at first, payers, and then payers and providers that didn't want to deal with setting it up themselves. That's overly simplistic, of course, because they're 15 years old and have done a lot of good in the world. But telehealth is very common now. Every health system has their own flavor. Many of them used Teledoc for a little while and then decided we can do this with a different provider. and so I think they're like the Cadillac premium service, and I think BetterHelp is kind of that too. But there's a lot of competitive inflow. So all of these rounds that are doing behavioral health, they're spending money on ad spend, and the cost to acquire. I mean, they say in here they're moving away from, they're not providing guidance on BetterHelp at all anymore because the customer acquisition costs are unpredictable. I think that means really high. And they, when it is super confusing and hard to know how to engage in this tele thing, Teledoc was the leader and the place that taught us all how to do it. And really, they got reimbursement first through the payers. And that advantage ran out a long time ago. And so now they don't have a new strategy as far as I can tell.
Yeah. I mean, it says here in the article, the BetterHelp's revenue is, just over $1 billion, $1.13 billion in 2023. They actually had a decrease in revenue in Q2, 9% decrease. So they were down to $265 million in that quarter. The whole business is, a little over $1 billion, and they're almost losing that much as a total enterprise in the quarter.
And I don't think the Teledoc platform is all that profitable itself. So the whole thing is, I think, a wonderful story in 2010 and not necessarily that exciting of a story in 2024.
Yeah.
And then, so this is their stock price.
Over the course of the year, it's gone from somewhere around $28 down to $8.59.
Yeah, so they've lost 69% in the last 12 months. And it doesn't seem like it's stopping there.
That's rough. Okay. Jefferson and Lehigh Valley Health Network complete merger. We talked about this right as they were starting their discussions around this, and they've been able to successfully complete their merger. That's a pretty big deal.
Yeah, which is great. And I'm excited to see things get through that whole process and close. And I think they have a lot of synergies together. I mean, they are near each other, but they're not I don't think they overlap much, if at all. And so it's a pretty good merger. It'll give more scale to both, and it's going to be good.
Yeah,
Good to see it
32
close.
hospital system. They are now one of the 15 largest nonprofit health systems in the United States. So that's pretty significant. They're going to be able to create more educational opportunities. Look, I mean, nonprofits need to merge.
Yeah, right. I mean,
nonprofits need to merge. They need scale.
Yes,
They need scale.
you and Emily taught me when I was floating on the Pacific that nonprofits need to get scale. They need to get more professionalized. They need to really start thinking about their referral networks and how do they get their catchment area aligned with diagnostics. And so this is a step in that direction. Okay.
All right, our pharma stories. GSK lifts guidance after their HIV and cancer treatments boost sales. They said that they expect their 2024 revenue to grow between 7 and 9%. So that's a good result.
Yeah. So again, on the theme that everyone in healthcare is doing well, GSK is doing well.
And on a not so great note, we've talked in the past about how the business model for antibiotics, as they are getting more resistant, or I should say the diseases are resisting antibiotics, as well as the payment models are really sort of pushing down the margins, is making it much, much harder for you to operate these kind of businesses. And Wall Street Journal is here covering right here in Tennessee, in Bristol, Tennessee, U.S. Antibiotics is potentially going to go out of business.
Yeah, and they make amoxicillin, which we need.
That's a big one. Everyone knows amoxicillin.
Everyone has had amoxicillin, and there is no way that our country can survive without generic amoxicillin, period. I think that's the end of the discussion. We need to figure out a way to design the market so that we can continue. This is a significant operation, and they're on their third owner. Every owner so far has lost money and lost money and lost money, and it's not going to work. They're not going to be able to continue.
Yeah, and just for anyone who wants to know the scale of this, every day they produce 1 million doses of amoxicillin.
Yeah.
For America.
Right. And our other sources are from India and China.
Yeah,
which,
that's
nothing wrong with those sources, but they're a long way away, other side of the world. And especially on the China side, we have geopolitical risks where they could decide to not send them at some point.
I mean, this is exactly the kind of situation where you have to sort of look at the potential risk here and say the government has to step in and do something, right? We cannot fully outsource our generic antibiotics to other countries.
Yeah, doesn't make sense.
No, that's crazy. You can't let them win on price. You know what I mean? And not acknowledge how that creates a serious vulnerability in our own sort of resilience as a nation.
Yeah, I think it's
crazy,
very straightforward, and yet neither side is even talking about it. Right?
Yeah. I mean, it seems like a pretty easy win, actually. Like, I mean, it's a pretty scary story.
Yeah.
If you could manage to get some airtime and like float this out there, it's a pretty scary story, you know?
Yeah.
So it seems like a pretty easy opportunity for somebody to make a policy promise and get a lot of support around it. And then I love this story. So Wall Street Journal covering the companies that, I feel like Theranos is now far enough in the past that we can wrap our heads around the idea that maybe the science has advanced enough that a new company might actually be able to do what they're doing. And okay, not everybody is going to be Elizabeth Holmes and is kind of like, a sociopath or whatever. Right. So it's great because the reason why Theranos was so hot is because there was an amazing promise, right? It was an amazing, amazing promise.
No one likes to give a lot of blood to have a diagnostic test done. I mean, I don't mind it, but no one likes it.
That's right.
And if you could do the same analysis with a drop of blood,
be amazing.
It's amazing, and really, and Theranos taught us that would be great.
That's right. Yeah, we know there's market appetite for that.
Yeah, but it also sort of exemplifies, I think, why we here in Nashville continue to have success investing in venture. Elizabeth Holmes did the Silicon Valley kind of process of move fast, break things. Yeah, there's going to be rules that you bend or even break along the way, but we'll figure that out after the fact. And Uber, Airbnb, lots of people have challenged regulators and kind of won, meaning they have a huge net worth. That is very difficult in healthcare. I'd say it's impossible. Certainly, Elizabeth Holmes didn't succeed.
Right.
You have to follow the rules, and she wasn't. But now that Truvian, I think you say that, Truvian Health, and there's a couple others later in the story, Drawbridge, are taking this technology and improving it and doing it in open, doing it with the regulators.
Yeah.
And they're making a lot of progress.
I mean, these are real companies.
Yeah.
You know,
that's right.
Becton Dickinson is a real company.
Yes.
So, you know, it's immediately, they're not going to be, you know, pulling the switcheroo on you, right? I mean, they're going to walk the path. They have patient capital. They have a broad enterprise. They have lots of resources and great relationships with the FDA.
Yes.
So, you know, they'll navigate this process.
Yeah, and it'll be great for patients and great for whether it's the government or employers or whoever's paying for it. It's better to get more diagnostic early.
Yep. And then sort of your special interest story here about health and us. Forget cutting sugar. New tech makes it healthier instead. So, you know, just look, it's just par for the course. GLP-1s. Let's just turn sugar into fiber in the gut with you know, with science.
Yeah, that's right. So this company is adding their special enzyme to sugar so that when you digest it, it converts it to fiber, and it ends up being moderately healthy as opposed to not healthy or quasi-toxic. It's too expensive today, but they're working to make it less expensive, and I'm all in favor of it. I have a sugar interest, but I can't eat very much of it because it's not very good for you.
So I mean, I need to be watching my sugar because diabetes is just something that, you know, I have a genetic predisposition for. That's a maybe fancy way of saying it runs in my family.
Yeah.
But in terms of fiber, so recently I did some blood work and my doc basically was like, okay, I think did I tell you about my LDL and ApoB going in opposite directions? Which
we talked about that. I don't think it was live. We talked about it when it happened.
Yeah. So my LDL like dropped by 20 points.
Yeah.
My ApoB like went up by 20 points. It was like kind of like insane. And so that brought a focus on size of my LDL particles and us talking about fiber. And so what I've been doing every day is making a smoothie in the morning, and it's a berry smoothie. And it's pretty crazy, dude. But I put a half a cup of ground flaxseed in this smoothie.
In the smoothie.
Yeah.
It's pretty thick. Well, how big is it?
I mean, I put water in there.
Yeah.
But like just like half a cup of ground flaxseed is like half of the fiber you need
for the whole day. Yeah.
So it's like in this one smoothie that I drink in the morning, and it's been pretty powerful, man. It's been pretty powerful to like just inject half of my daily fiber, you know, in the first couple of hours of the day. I mean, it just kind of shows me, wow, I was not getting adequate fiber before. Yeah. Like it's pretty transformative. And I think most people have no idea how low their fiber intake actually is, right?
Yeah.
I think most of us are not even coming close to the recommended daily intake of fiber. And so this is, to me, I thought this was really, really interesting because it does have a lot to do with a lot of different things, cholesterol being sort of a big one. Mm-hmm. And, you know, one other thing I was talking about.
It also kind of slows the processes. You don't get that sugar spike.
Yeah. Well, one other just thing on this front. I was talking to my trainer, and he is really into sort of where everything is going from a physiology perspective and the bleeding edge, you know, of like, you know, exosomes and peptides and all that kind of stuff, you know, none of that stuff is FDA approved today, right? You know what I mean?
Right.
Like you got to like go to Tijuana or something to like get it, but he tracks all that stuff and he thinks, and this is a guy who, he trains every day, trains people, he thinks we are heading for a world maybe 20, 25 years from now where literally it's just like a shot and everything you get in a workout, you just get a shot for, So like what we have today with GLP-1s in terms of like it driving your weight loss, he's like, I think in 20 years, they're just going to give you a shot and like you're going to get muscle density, like all the contractions, all the things that we're doing in this workout are going to be delivered via science, which I'd like.
I don't know if I buy that,
which I didn't love at all. Okay, well, would you have bought GLP-1s 20 years ago?
No.
Yeah. Okay. So
I'm not. I don't buy them now. Well, I wouldn't use them now. I wouldn't use them now. I guess. Yeah. Yes. America's
buying it.
Oh yeah. If there's a shot, America will take it.
America's going to take it. Yeah. America's going to take it.
Yeah.
I mean, look, I'm not taking it either, right? But I just think this trend is inevitable. Clearly, Americans have said, and look, I think it's fair when you think about the economic pressure, inflation, job market, all these other kinds of things. People don't have money and time to maybe do all the things that one should do to be healthy, and maybe they've tried and they just don't have the right environment or they haven't found the right thing for their body type or whatever. And it's like, okay, give me the shot, man. I want to be healthy. I've tried other things. It's not that I haven't tried these other things. I've tried. It's just not working for me. Give me the shot, And I think more things are going to be figured out. I mean,
There's no question about that.
The idea of an enzyme that turns sugar into fiber.
Yeah, it's brilliant. I mean, if they can get it at the right cost point, it's brilliant. And that's a good lead. And my guest, so I have a guest episode. You weren't able to make it, but I had a great conversation with Dr. Eric Oberg. And we talk about all of these. It's a longevity discussion, but she talks about the exosomes and how you would engage with that sort of longevity space. So it'll fit well with this. I did it last week. I think we're going to push it out next, coming up. So it'll be the next
week. Next week. I can't wait to listen to it. So anyway, I just thought this was a really interesting story given like what I'm doing for fiber right now.
Yeah.
Which is chugging a half a cup of ground flaxseed. I think a lot of people would prefer to just turn their sugar into fiber than do what I'm doing. All right. Now, finally, running through all things AI. Cleveland Clinic names their first chief AI officer. And guess what? He does not come from the healthcare industry.
Yeah. I caught this because I was really interested to see, a very leading health system name their first AI officer. And then as I looked into it, it's pretty surprising that he doesn't have experience in health. I don't know if that's good or bad, but that was interesting.
Yeah, he comes from SiriusXM Pandora.
Right. The music business.
The music world, yeah. And, certainly there's a lot of great data science happening in the music world. No question about that. I think the technology and the data science, insights can certainly be ported over. I think understanding all of the regulatory challenges and understanding the cultural challenges of the healthcare industry is an entirely different matter. He is a PhD, and so he at least understands academia very well, and there's certainly a lot of bureaucracy in academia. So I think that will give him some level of familiarity with everything that's going on there. But yeah, his background was SiriusXM, and then before that, Verizon Media, Yahoo. So he was an ad science guy.
Right.
He's basically been in marketing and consumer and music.
Yeah, it's going to be the clinic is what they call it up there. It's they invented the sort of doc specialty focus thing. It's going to be interesting to see how their AI officer cuts across that. I don't know, but it's going to be interesting to watch.
So this officer is going to report into their chief digital officer, so that we know that that's kind of the org structure aspect of it. And I think it just begs a question, which is, look, HCA had a chief data science officer. They didn't call it the chief AI officer because we weren't talking about AI, but this is what, Edmund Jackson did at HCA for a number of years. And he didn't come from inside of healthcare. I mean, is this, and HCA was ahead of the curve on this because they had the data and they recognized they needed to do something with it. But is this the beginning of us recognizing that in order to bring the talent that is needed into these healthcare organizations, that talent is not from within healthcare, and we're going to be bringing in people from other industries and having to, educate them and get them cultured in. I mean, with all fairness, I mean, Edmund did become quite the healthcare expert in his time at HCA, and now he's launching Unity AI, which is a healthcare focused AI company. He could have left HCA and done any kind of AI company, and he decided to do a healthcare focused one.
Yeah, I mean, my entire career's in healthcare. I think there's a lot of reasons we can recruit experts from other fields to bring their strengths to healthcare. And sort of hearkening back to the Theranos story, you need to be a little more careful in healthcare than at SiriusXM. It's not the same. So I haven't talked to this. His name's Ben. I'm not sure how to say his last name.
Yeah, we're not even going to try. We'll put the link in the notes.
I'm hopeful that he has an open mind and he can bring his expertise, and the clinic can certainly teach him about healthcare. We'll see.
Okay, I'm actually going to try. I think it's Shashahani.
Okay,
I think that's it. Yeah, Ben Shashahani, PhD.
Yeah. Great.
All right, moving on. Okay, we have some Substack stories here.
Yes.
So Silicon Sans News. This is follow on from last week. We talked about Llama's big release, going open source, sort of the meaningfulness of this. And of course, when you go open source, there are people who know open source and will read the license and will, kind of get down and dirty with whether or not it is actually open source. And of course, it is open source to a degree, but there is a spectrum, right? Is it spectrum? Is it BSD license? Is it GNU license? Is it like true traditional open source, or is it kind of corporate open source? I think we found out that this is in fact corporate open source. So the headline of this post from Dr. Seth Gobrin of Silicon Sans News is Faux-pen source, Meta's Llama models. And it basically shows some of the restrictions and the limitations where basically once you get to a certain level of success or popularity in terms of the use of the model, some corporate things start to kick in.
Yeah. And so the way I understand it, you're much more technical, so you may have a different view. But once you get to 700 million users, you need to go back to Meta and figure out some other license. The license terminates, or you cannot use it for more than 700 million users. I read that as them wanting to prevent really their direct competitors, the hyperscaler competitors, from using this their own tool against them. But certainly, if you're trying to build a direct consumer model that is going to be a unicorn and try to really go public, you may not want to use Llama. For most startups, that seems like a long way away.
For sure.
But yes, that's the significant change from most open source things. Compared to Minstrel, I think it's much better.
Yeah. That's right. I mean, I think anyone with just sort of a modicum of a understanding of how a publicly traded company is going to act over something as serious as AI and LLMs is going to know there's going to be some hooks in the license, right? It certainly does. Actually, we were talking. I was talking to Aaron, our producer for the podcast, before the show today, and he was talking about how ChatGPT went down. Because
I didn't know that.
Azure had a massive outage.
Okay,
so ChatGPT went down, and he was like, I can't do work.
Can't do my job.
Can't do his job for my clients because I'm dependent. And I said to him, that's probably a good use case for, downloading Llama to your laptop, right? And starting to train it so you're not subject to Azure or AWS or something like that going down, right? And he was like, yeah, I totally agree. Like having everything local kind of really makes sense. And so in that case, that's a really powerful use case where the more people that actually say, hey, let me just go download Llama, put it on my laptop and start training it and getting it to really work in the way that I want it to work. And then saying, okay, I'm going to cancel my OpenAI subscription, right? Because I got this thing, it's local, I don't pay any money for it, and it does what I need it to do. I'm never going to run into a big license issue here. Meta's not going to care at all about me. And I think in that context, it is still massively disruptive. But it is important to understand what the limitations of these licenses are.
Yeah, that's right. I think 700 million monthly active users seems like a reasonable threshold, and a lot can be done below that.
Yep.
I have tried to download it to my laptop.
Oh, it's not
that easy to use.
It's not buttoned up yet.
Yeah.
Okay, moving on. OpenAI is launching a search engine and taking direct aim at Google.
Yeah. Of course, we knew they were going to, but they have done it now, and probably good for consumers.
You know, I think it's interesting. Like, what does it say that OpenAI is launching a search engine? Is it that they are taking direct aim at Google, or is it that the search engine interface is still the preferred human interface for queries as opposed to a chat interface, right? Regardless of the feedback or what comes out of the other end or any of that kind of stuff, I have long questioned, just because of my own comfort level. Like I'm just noticing, where do I default go to get answers? I am still going to search engine interfaces, right? I kind of like Perplexity better than, Chat GPT, because it's a search engine interface, more so than a chat interface.
Yeah.
And I think that's as much at the heart of what's going on here as them taking direct aim at Google. I mean, the fun media story is they're taking direct aim at Google, but I think they probably are realizing there are some limitations to the stickiness of the chat interface versus, the search engine interface is clearly a winner.
Yeah. I mean, I view it differently. I think that the search interface is the winner for the first iteration of the web. I don't know that we know what the interface is for the AI use case. I'm on Android, and so I have a different life experience than most Apple users.
Yep.
And so I love the voice interface. I've used both OpenAI's voice interface and Gemini's voice interface. I like them both, where I can pick up my phone like you would, like an Apple person would with Siri.
Yep.
And I ask the tool in just my normal voice, and it spits out the answer. It's great. Like Siri, if Siri worked. And, Apple will get their act together eventually, and then we'll have probably 15 other ways to interact with AI. I'm not sure that going back to the Google kind of search interface is the end state, but I agree that they're playing with lots of different ways to take their intellectual property and use it in ways that can bring value to customers.
Yeah, and
that's more what they're doing than trying to kill Google. But it's going to end up in the same place. Google and OpenAI are on a collision course.
That's right. And I mean, Google created Gemini, and Gemini is basically a ChatGPT clone. So,
there's no love for Google as a protected entity.
That's right. Yeah. I very much agree with you that we don't know what the end state is. I guess I just don't think we have graduated from the search engine interface. I think that's probably more what I'm trying to say.
The thing that is great about search is it's easier to monetize. If you ask something in a search query, you have an intent to take an action that is reasonably easy to think about, like, what could we put around this that could be monetizable? Whereas the chat interface is more nuanced, more complex. It's you could use it for lots of different things. It's different.
I think that's certainly the business case. One of the things I like about the search interface is that does not give me a single result. The single result to me feels deterministic, and it does not give me much agency. And that could be a trick, right? But I certainly like the idea of searching and getting a page of results and then thumbing through and kind of seeing what I might want there. And Google has already integrated Gen AI results at the top
into their search,
into the search.
Yeah.
So I'm like, yeah, that's fine. You can give me that, and then maybe I kick off from there into a chat about that.
Right.
But also give me everything else the web has to give me. You know, I like that. I think there's a lot of value to that. So.
And I'm
lots of sides to this.
I'm optimizing for the hands-free voice thing more than the
which is legitimate
chat interface thing.
Yeah, that's legitimate. All right, 2 more stories. We got the story from Gary Marcus, who is we should just preface. Gary Marcus is a big critic of Gen AI. That's his whole thing. He is a critic of Gen AI. He's got a Substack. If you read 10 articles of Marcus on AI, 10 of them are going to be pretty cynical.
Right.
But one thing I have noticed is he has moved from opinion and commentary to starting to aggregate different anecdotes about areas where Gen AI seems to be falling short. And I think it's helpful because we've had enough time now to play with Gen AI. And we talked about it last week as we're trying to figure out, is all of this investment worth it? I think the Wall Street's starting to ask, is all this investment worth it, right? And he is now starting to aggregate different anecdotes to show people are not actually changing their productivity levels. Now, I just talked about how Aaron is leveraging ChatGPT to build a business, right?
Yeah.
And I think when you're talking about de novo businesses that start with AI in mind and really sort of optimize for it, yes. But bringing an old world or pre-AI world business into the AI world, that transition is just not that easy.
Yeah, there's no question. We had an Insight, Kristen, who works with us, we had a call with a bunch of our founders of what are they doing with AI? Where could we help? What can we learn from each other? And the biggest challenge is integrating the results into the workflow where I could actually do something with it. And no one has really figured out how to do that. So Aaron has his, basically him, and he's got a bunch of people that are helping him do work. He probably has designed a workflow around it maybe. But it's very difficult to get the chat interface plugged into email or plugged into Slack or Teams in a way that really scales. We haven't been able to do it internally. It's hard to do it. And then the other thing, the second story on here is interesting too. Like, Meta came out with their celebrity AIs where you could chat with a famous celebrity. They paid a bunch of people a bunch of money to leverage like Mr. Beast or whatever. And then they just shut it down because no one cared.
No one wants to do that.
No one cared. Like, the part of like interfacing with a celebrity is like the real person. Like the excitement is with the real person. If it's a fake person, it's not that you need to know what Mr. Beast likes for lunch. You want to like actually hear what he's having for lunch. And if you say it's a fake AI, you lose a lot of the value of it, I think.
Yeah. So, I mean, there's a series of stories here. One is about a CIO that canceled a Microsoft AI deal, and it was a pharma company. So, pharma company, that ain't no small deal. There's just a variety of different anecdotes in here that Gary Marcus has collected. And I think it's timely to start really evaluating the investment that was made. Mark Zuckerberg took a ton of heat for the Horizon Labs investments that he was doing, billions of dollars to build out the metaverse. He ended up having to walk that back. It's not that he's, Quest is still a thing, but he's, you don't hear him not constantly talking about the metaverse anymore. And look, all of the Magnificent Seven made all these AI investments. That was the hype cycle story that rose all of those boats over the course of the first 2 quarters of this year. And we know that because NVIDIA did the best.
Right.
And their whole story right now is AI. And right now we're having a big, what's going on here? Why do we spend this much money? Is this really worth what we say it's worth? So that's, I think the scary thing about this is not just Gen AI. The scary thing about this is that these 7 companies, because of AI, have propped up the S&P 500.
That's right.
And if you take away the AI story and you take away those gains, you got a whole different question about how our economy is actually doing.
Yeah. And so back to the beginning of this conversation, this is just beginning. This was the first quarter. The last story is about Microsoft with the same issue. So click on that. We can talk through that. But they have the exact same issue. They've spent, a ton of money, and they haven't yet really seen the benefit, which is what we talked about with Google last week. We're starting to see this percolate out. And I think in another 2 quarters, it's my belief that you're not going to see the workflows get all cleaned up and huge productivity gains.
No way.
And so the bloom's going to be off the rose. The election will be over. We'll have had 2 or 3 Fed rate cuts, and it's not clear what is going to help the economy keep growing. Now, maybe we'll get something else, which would be great, but that's what makes me nervous about the not even long term, but the 6-month view of where things are going to go.
Hold on, and then let's just bring it back to us, because why are we doing this?
Yeah, right.
I mean, we've talked for weeks about. I've enjoyed seeing these mental health companies getting these really big rounds, because that feels a lot more real.
Yeah.
But we've talked for months now about how the majority of big VC rounds have been going to AI companies.
Yeah.
Right. And I don't think either one of us, from the very beginning, felt comfortable with that.
Yeah.
We weren't comfortable with investing in any AI deals.
Right.
Right. I don't think I've ever even had a hard conversation with my portfolio. Like, what are you doing in AI? Like, I might be curious about it, but I'm more like, who are you selling real value to? And look, I don't know what's going to happen to the GP-LP community if we take another big hit en masse because there's a bunch of bad paper out there because you inflated the value of these companies and threw hundreds of millions of dollars at it. And the AI thing is really a bubble.
There's no question that's going to happen. The valuations cannot be supported in the number of companies that have raised money. It's impossible to see it happening. Now, will there be successes? Yeah, yes. I think there'll be really big successes, probably in small teams that are using AI to deliver some value much more effectively than their old competitors that are using some other tool. But the number of companies, especially in the actual models, let's just talk about the models themselves, because that's the most clear to me. There's billions, hundreds of billions of dollars in those models, and it's not clear how they're going to make any money, like make any revenue.
Yeah. Like where is the monetization for licensing a model?
Yes.
Right?
Yes.
Full stop.
Yes. NVIDIA is pre-selling their capacity, so they have sales out into the future, and they have the marquee chipset. But if they stop really having the pull-through, it's not clear that there'll be that much use for all of these NVIDIA chips out there, and you have a secondary market. It could be really challenging. So I think part of what I want to keep doing on this show is talking about the capabilities and following it, but also being honest with each other and with our audience about where there's challenges. And right now, the business model has not been created. We've talked about this before. It's very similar to the internet in 1997. Like, the only difference is that our communication and our financial markets are so much better now because of the internet and social media, that capital flows so much faster that I think the problem is maybe slightly bigger than it was in the internet.
I think it's more important to cover it once the hype cycle hits this phase than it is on the way up.
Yeah.
Because once the disillusionment starts to set in and it hits that trough and everyone's just like pissed off and, slashing valuations and stuff like that, that's when the real builders get to work and real stuff starts to get figured out. And that's exactly when you don't want to turn away. You want to double down then. And so we're not going to stop covering it just because we're hitting the trough of disillusionment. In fact, quite the opposite. I think we're going to get more focused and try to pull more of the nuance out of what's actually happening here and where are the wins. I mean, to me, that story that I think, was it last week we talked about Augmedix and Commure, that merger?
Yeah, I think that was last week.
Okay.
Yeah.
I still have not wrapped my head around how Augmedix, which is the ambient scribe company that was racking up all those wins, was a publicly traded penny stock, effectively.
Yeah.
It's worth $150 million.
Yeah. All the oxygen is pulled by the top 7 stocks. And I agree. We need to lean in more and cover it and follow it, because the time to invest is going to be in a year and a half.
Yeah, soon. Yeah. It's coming.
So I graduated from business school in May of 2002. Sorry. So a long time ago. And, the internet crash had happened and I got a job. And so I had been in business school, right? So following all this stuff just because I was interested in it. And I was able to, I bought Amazon stock for $23.17 a share. And it's the best trade of my life.
Yeah.
And I should have bought a lot more, obviously. But there's going to be opportunities like that again, where like, it's just such a overhype, which we are in right now, but maybe beginning to see the end of. And then there's a correction over to the downside. But the winners will be clear. And they'll be the ones that are actually having customers that are still paying and they're delivering value, even though the valuations are really low.
Yeah. So. Yeah. All right, man. Another great show.
Yeah. Yeah. Be good.
You are out next week, right?
I'm out next week.
All right. I got to find a guest host.
Yes.
I'll figure something out.
Yeah.
If not, I'll just do it by myself. I mean,
is it the DNC? Might be the DNC.
Is it DNC?
We got to look at it. Aren't they early August?
Yeah.
Maybe you could have Emily. I don't know if Emily will be ready.
I don't think she's going to be ready. And
Trump has like tons of information. Kamala doesn't have as much, so it'll be harder to put together the
but Emily's been working on it. We've talked about it. She's starting to kind of piece things together. So it'll be interesting. It'll be interesting.
Yeah.
I'm looking forward to it. All right, man. Look, thanks for the show this week, and we'll be back with you in 2 weeks.
Yeah. Okay.
Later.